I actually ended up doing some research last night on some stuff, and I kind of wanted to get your thought on just the reopening in general. And I picked out like certain sectors that I thought were going to continue to do well and are still buys. And I picked out a few stocks from Fundstrat. If you guys are familiar with Fundstrat, they sent out a list of reopening stocks, and I kind of picked the ones that were my favorite and kind of wanted to get your thoughts on them. So I was just going to run them by you and kind of see what you thought. But my first one's going to be in the airlines. In the airline industry right now, obviously it has been hot. There's definitely ones that we still love, no pun intended, but it still is Southwest. But Southwest, if we look at the chart right now, and I'm just going on the weekly chart, I'm actually going to pull this back. Oh, no, the weekly is probably a better, just so you get a better idea. It's well above the pre-pandemic highs. Now, people could argue, well, there's going to be a double the demand, could even triple over the summertime. We already have seen how tickets to fly anywhere has just gone through the roof. And so this could explain a lot of the reason why. But there are still airlines out there that I think are good buys that actually aren't this high and aren't above their pre-market or pre-pandemic. I keep saying pre-pandemic highs. And one of them is Alaska Airlines. This one actually, I think, is probably a good one. It's actually down on the day. It could be a good opportunity. It's at the pre-market or pre-pandemic highs right now, but I think that this could be potentially on a pretty decent setup for a breakout. When we saw this with Southwest, it certainly did that. I'm also looking at potentially JetBlue as well. This is a little bit cheaper. These are just smaller airlines with good balance sheets, relatively speaking, if we're comparing apples to apples. And I think that these are going to be good ones to potentially grab that haven't gone quite as high as JetBlue. And then lastly is going to be Delta.
Hell yeah.
So Delta, in my opinion, is probably the one that has the most upside.
Yep.
Given where it's at, it's hovering right around its 200 moving day average.
Yep.
We're still waiting on international travel to come back.
Tell them.
Southeast Asia, as well as Europe. We just heard news that the Biden administration is sending over 20 million doses of the vaccine to Europe. So as they continue to fight the virus and catch up to the U.S. as far as COVID cases are concerned, I think that Delta definitely stands to be a really good buy too.
Preach. I mean, Delta, that's the one I have in the long-term trading account for us. And for those same reasons. And you want to sort of, with the market being forward-looking, like it's only going to be a matter of time before it catches up. Doesn't surprise us that out of all of them, it's a little bit lower.
Yeah.
But it's always been 1-2 with Southwest.
Yeah. It's the international exposure that's why Delta hasn't moved quite as much, but I think that gives it the opportunity.
Yeah, so my point is we both made that point.
Yeah.
My point is the fact that you don't want to wait till they tell you it's back. It's a forward-looking vessel. So you talk about that all the time. So you would want to get in now knowing that eventually international, or I would want to get in now. Eventually, international is going to come back. And that's why I chose it for the long-term account. But all those are good. Even Spirit, like I was thinking about Spirit, which is based in Florida.
Yeah.
Save Spirit Airlines, not Spirit Aerosystems.
Yeah.
Save still has a little bit of upside from the pre-pandemic. And my thought is with all the flight prices being like through the roof, maybe something like Spirit it's going to push people towards Spirit, which is a low-cost carrier.
Yeah, and I think that's definitely, you could definitely make the case for that as far as the bull case is concerned with Save as well.
What's the next industry? The
next industry that I've been looking at has been the cruise industry, and we just actually heard news today that Norwegian is working with the CDC on plans to start sailing again very, very soon as June. NCLH is the ticker symbol. We look at Norwegian right now. I think that it's Norwegian and Royal Caribbean, and the rest of them are terrible. There's not one part of me that would want Carnival Cruise Lines. But you look at NCLH, and there's still plenty of upside to go here. Yeah. Yes, they have a lot of debt. Yes, they're going to convert a lot of it, so make sure that you're keeping an eye on that. But if you want exposure to the cruises, I think that Royal Caribbean and NCLH are going to be the ones to own because they have the least amount of debt compared to the other their other competitors. You look at Royal Caribbean, yes, it's priced a little bit higher, but I think that it's deservedly so. And you look at the chart, honestly, I think that Royal Caribbean's probably my favorite one out of the two, but you can make the argument for both of them.
Yeah, I have Royal Caribbean. I like this list.
Yeah,
because I have these things
so far so good.
Slightly green in my long-term account with Delta and Royal Caribbean, and still upside, so I feel confident in the position.
Yeah.
But even a better example of forward-looking. You don't want to wait till cruise liners launch.
By the time you hear the news, it's already too late.
Yeah, it's already too late. That's good. Good stuff.
The next one's going to be the casinos, and MGM actually. I brought this up to our level 3 folks in the Chaos Crew. Shout out. If you guys want to be a part of the Chaos Crew, make sure you're hitting that join button next to subscribe. But if you look at MGM, it actually popped up as much as 4.5% this morning. But this one is another one that I think just the casino plays in general. We loved MGM. They have one of the best balance sheets in the casino industry. And I think, I mentioned this morning with our folks as well. Like the insiders that bought, I think it was upwards of like $40 million worth of MGM at like $12, $13. The insiders that bought it were like, they've got to be reeling in it right now because it's gone up 4 times that just about. So I think, this is still going to go up. I know that it's gone up above its pre-pandemic highs, but the upside here is still really great. We talked about the MGM Sportsbook or MGM Bets. And their relationship with the NFL, that's still going to propel them. And we haven't even, and Macau isn't even fully opened up either. And that's where a lot of their income comes from. But it's really encouraging to see that Vegas is fully reopened. I think another one that I like on the list as well, as far as COVID or the casino plays are concerned, is Las Vegas Sands and then also Wynn Resorts. Those both also... Wynn Resorts in particular relies heavily on Macau, but I think that these both still have some pretty good upsides to them as well.
Yeah, I'm glad you mentioned Macau for MGM. That's one you were talking about in my Fat Man Zoom account, which is my long-term investing account. 10 stocks, that's it.
Yeah.
MGM is the M in Fat Man Zoom.
Yes.
And I got that at $14. Those are great.
You got MGM at $14? Hell yeah.
I got
that's
MGM
awesome.
at $14.
Hell yeah.
I'm surprised you didn't say Penn.
So I was going to bring up Penn, but I figured everybody was already going to know that.
Yeah, okay.
But for those of you who are new to the channel, shout out. Hope you subscribe. But yes, Penn is obviously our favorite one. The largest regional casino in the country. Obviously, sports betting also tied to Barstool Sports. But yes, this is our favorite one, highest conviction out of all of them. But we've talked about this a lot. So the next one, I think, for me is going to be theme parks. And the obvious one is Disney, but there's other ones. I think that Disney has gotten beaten down enough over the last earnings that it makes sense to start scooping some up. It's sitting here right around $170 and holding support actually pretty well. Even on the weekly chart, this is holding pretty well. So I think that this is going to be a good one to grab. But there's other ones in this space as well. Six Flags is one that I think that has some room to run as well. I don't think this is going to stop anytime soon. This is actually below its pre-pandemic highs, unlike Disney. So I think that if we look at this one, this has lots of upside to it as well. And then there's also SeaWorld, which has actually gone absolutely crazy. So I think that there's definitely this one you could be a little bit patient on, but there's no reason to believe that this doesn't go higher as well from here.
Yeah. I mean, isn't it crazy just how much better Disney is than the rest of them?
Well, yeah. I mean,
it's
nice to just have an entertainment business on the side of it.
I know. I mean, like it's like fight for second place. But yeah, I'm interested in especially something like SeaWorld from the long term. But as far as reopening's concerned,
people just want to get out and do stuff.
I think those are good opportunities. Yeah, like a good high upside, I think, have a pop to it. What's the next one? I think I know what the next one is.
Live events is one that maybe folks haven't really considered. I think that LYV, I actually bought some of this today. Live Nation is one that I think it's going to absolutely crush it. They're already selling they sold 100,000 tickets for their Houston venues and their concerts down there already. And I think and they sold 100,000 within an hour. Of putting them out. So that's just how high demand is for this. I think that Live Nation, They also are head up Lollapalooza, which is huge.
Yep.
I think that you look at this, even though it is slightly above pre-market or pre-pandemic highs, this is probably going to continue to go up. I think $100 comes for this easy, and in my opinion, this goes higher. You look at some other ones. There's Madison Square Garden, MSGS.
Boy.
I knew you were going to like this one. MSGS, Madison Square Gardens Corp. If you guys don't know who they are, this is obviously an entertainment business, but yes, they have a stake in the Knicks as well as the New York Rangers, the hockey team.
But they make their money on events. Like
they make yes, absolutely. So to go along with that theme of just them selling out concerts and other stuff, events, and there's the side of this as well with fans coming back into the stands, all that stuff. This is really low. The upside here, I think, is very, very good.
Let's go
for Madison Square Garden. 185.80 is where it's sitting at right now, and it was 316.39 pre-pandemic.
Hell yeah, worst owner in the business.
Yeah, and you pointed out this morning too, like if the Knicks actually do a decent job in the playoffs. They go far in the playoffs, they could at least bring some notoriety back to Madison Square Garden.
Well, and revenue, like if
exposure.
People had talked about, New York and will come back. Like Cuomo's sort of giving indications that he's going to bring it back quickly.
Yeah.
Or reopen quickly. And people are going to flood into New York. Like New York's not going anywhere.
No.
And so the Knicks have been irrelevant for over 20 years. I think one or two times they've been in the playoffs in 20 years. That's it. And they usually don't have home court advantage, so they don't have many games. They're the 4th seed in the NBA in the East. And so that means they have first round home court advantage, second round most likely home court advantage.
Yeah.
And so that could mean 4 to 8 games. They're not going to the finals, but 4 to 8 games in Madison Square Garden potentially.
Yep.
That's a lot.
Yeah.
That's a lot. There's a lot of revenue that you can make out, especially if they allow fans, like if they can go to full capacity.
Yeah.
That would be insane, the revenue they can drive there. So that's where you make your money.
Yep.
is on the playoffs. That's just all icing on the cake.
The last sector, I should say, if you will, is going to be gyms and fitness. And we talked about Peloton and how we still feel like Peloton is worth holding, and it's actually done pretty well since we've talked about it a couple weeks ago, and said that this most likely could be a potential bottom for Peloton. It's done really well. Peloton doesn't just own Peloton. We've talked about how they also own Precor, which is exercise equipment that is also housed by Planet Fitness. Yep. So you look at Peloton, and that's doing pretty well, and we think that Peloton actually has tried to diversify their revenue streams. And you look at Planet Fitness, as people go into the gyms more and maybe have a hybrid approach, maybe they just need to get out of the house to work out. This is still pretty low, below its pre-market highs as well, and I think that there's plenty of upside with Planet Fitness too.